Imagine you're staring at a chart, columns of red and green that look like candles flickering in the dark. Traders worldwide use these candlesticks every day, but what if I told you they're more than just pretty shapes? Behind those candles lies a silent war, bulls versus bears fighting for control. But who's really winning? Clive Lambert's Candlestick Charts invites us into this ancient Japanese visual code, transforming chaos into clarity. Let's crack the market's secret language and find out who's calling the shots. Before diving deep, you need to grasp how these candles actually tell stories. What exactly is a candlestick, and why does it hold the power to reveal market emotion and direction? Back in 18th century Tokyo, a rice trader named Hama Monehisa transformed how markets spoke. He developed candlestick charts to decode price moves in Japan's rice market. Unlike cold numbers, these charts showed the tussle between buyers and sellers with shapes, colors, and shadows. Lambert shows us how this age-old wisdom still pulses through modern markets, connecting centuries in a single glance. Each candlestick is like a tiny battle scene. It has a body, showing the price range between open and close, and shadows or wicks that mark the extremes. Imagine it as a campfire. The body is the flame's heart, the shadows its flickering edges. Green means buyers charged ahead, red means sellers took command. This anatomy transforms raw prices into a vivid story you can actually read. When you look at a candlestick, you're spotting the battlefield, bulls pushing prices up, bears dragging them down. Lambert's insight: you're not just seeing numbers, you're visualizing the human drama behind every trade. This makes charts less about data and more about psychology, a secret weapon in your trading toolkit you might have overlooked. Knowing what a candle looks like is one thing. Spotting patterns that predict the next move, that's where the magic turns real money in your pocket or heartbreak. What patterns matter and why? Imagine an evening in London's bustling financial district. A trader spots a hammer pattern, a small body with a long lower shadow after a downtrend. Clive Lambert explains it's a sign bulls might be gearing up for a comeback. Now flip that exactly into an uptrend and the same shape becomes a hanging man, a warning that bears may strike. This duality keeps traders on their toes, proving context is everything. Engulfing patterns are like plot twists in a thriller. Picture a small red candle overtaken entirely by a swelling green candle the next day. It's as if the bulls fully overpowered the bears in one decisive action. Lambert likens this to a boxing match where one fighter suddenly knocks out the other. This clear shift signals a potential trend reversal or acceleration. Money moves on conviction, not hesitation. And then there's the doji, the market's shruggy emoji. It looks like a candle that couldn't decide if it wanted to rise or fall, with open and close nearly equal. This tiny sign packs punch, signaling indecision in the crowd. Lambert's insider tip: a doji after a strong run could mean the current trend's gas just ran out. Traders learn to spot these pauses as clues to brace for a surprise move. After uncovering the secret language and patterns, Lambert gives us trading commandments, rules that turn insights into reliable strategy. What rules can keep you safe and profitable? In one story, a UK trader jumps on a bullish engulfing candle too early, only to see the price collapse the next day. Lambert's rule emerges loud and clear. Candle patterns must be part of a bigger picture, never standalone signals. This guards against false alarms, which can cost you big time. It's not just a pattern, it's the landscape around it that confirms the move. Lambert emphasizes confirming patterns with volume and trend analysis, likening it to checking all your senses before crossing a busy street. Just because a candle looks bullish, if volume is low or the broader trend is bearish, you might be walking into trouble. This multi-layered approach acts like your market seatbelt, protecting you from naive mistakes. Perhaps the toughest yet most powerful rule: be patient. Wait for the candle to close before acting. One of Lambert's anecdotes tells of traders who jumped on intraday signals only to lose on reversal candles. Candle closure is like waiting for the actor's final bow. You see the complete performance before applauding. This patience saves your capital and sharpens your trading edge. Remember that flickering candle battle from the start? Now you see each flame as a signal, each shadow a hint. The market isn't random noise, it's a dialogue between bulls and bears, visible if you know how to listen. Try this: next time you glance at a chart, spot one candlestick pattern, then pause, confirm it with volume or trend, and wait for the close. That small discipline may save your next trade. Subscribe for more book summaries like this one.